Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining my colleague Yatin, Mota. Well, Yatin, it definitely panned out to be a wonderful Wednesday because we saw that the Nifty has cruised above that 25,200 mark and Sensex also surged over 500 points. It was a clear structural uptrend throughout the day, and we saw that the banks and autos, all of them helped bulls power ahead. IT stocks, which however was doing well, ended the day with about with a flat to about slim gains with about 0.2% gain. Barring FMCG and realty stocks, all of the sectors saw a good set of gains, and India VIX that remains at comfortable levels of 10 levels, and that's what helped revive a bullish sentiment in the markets too. So yes, stock specific action that continues given that we are into the thick of the earnings season. But yes, not major participation came in from the broader end of the markets, and yet then I think that's where the weakness was, given the breadth of the markets reflected declines taking an upper hand once again.
Yes, if you look at the markets, clearly we started the day quite weak, and probably in the last 1 hour of trade we had momentum coming in. Obviously, we have the Infosys numbers which have just come in, and what I gather is that the guidance for FY26, which was earlier 0 to 3%, has been raised on the lower end to 1%, and the upper end of the guidance is 3% growth. So Infosys numbers on the face of it looking like have met the street expectations. So we will see how the stock reacts. In the last 15 minutes of the trade, we had the stock move down 2%. So that also impacted the share price and the index momentum. But yes, the overall market structure remains quite positive, especially on the mid cap side.
That's right. But yes, let's take a look at some of the top gainers and losers on the Nifty 50. If you look at the gainer there, some of the auto stocks did well on the back of US-Japan trade deal. So we see the likes of Tata Motors and of course Bajaj Auto seeing a gain of about 1 to 2% each. On the other hand, Shriram Finance with about 2%, quite volatile past few days, up and down, and today once again up ahead of its June quarter results, which will be out in 2 days on Friday itself. So yeah, Shriram Finance doing well ahead of its June quarter performance. Bajaj Finance also did well with about 1.5% gains. Tomorrow, the June quarter results will be out, and Moneycontrol poll estimates that there will be a double-digit net interest income and profit growth is expected. On the other hand, if we look at the losing end, Tata Consumer Products with about 2% cut ahead of its Q1 earnings, and HUL also seeing a cut of about 1% or so. So some of the FMCG stocks are not doing well in today's trading session. And Ultratech Cement, however, also saw a cut of about 0.6% after its Q1 results, so extending its downward trend to the second consecutive day as well. On the other hand, if you look at some of the other losers, Bharat Electronics and Grasim were some of the other losers as well. But yes, broader end of the markets that continue to reflect the pessimism. Small cap and mid cap indices, both of them ended flat in the trade, but yes, they underperformed the benchmark indices. Yatin, anything that you're gathering from the broader end of the markets?
Yeah, so the broader end of the market, we had Ola Electric, that stock surged nearly 8% intraday, and we had volumes of nearly 25 crore shares. So the huge volume led to the stock move 7% in trade. What was also doing well is the likes of GM Finance, 6%, half of that one. Credit Access Grameen post the numbers up 6%. What was not doing well is the real estate pack. We had two block deals today, one in Oberoi Realty and one in Lodha. Both of these stocks were down in trade. In fact, Lodha fell nearly 8% in trade, and Aditya Birla Real Estate, that stock earlier known as Century Textile, that fell 6% post the numbers. Colgate Palmolive and clearly brokerages have been quite muted post the numbers on the outlook and the target prices. That stock saw nearly 4% decline, and we have stocks like L&T Finance, Paytm, JM Financial, as well as Schneider, which have hit fresh 52-week highs in trade today.
That's right. Those were the top gainers and losers from the broader end of the markets. But yes, let's now break down some of the stocks that did grab limelight today. Paytm, the stock which was the Dalal Street's talking point today, 1.5% gains, and the company's stock did rise after the company reported its first quarterly profit without any one-offs. The company's top line also saw a double-digit increase in the first quarter. So yes, that is why the stock did well. Also, the street appreciated the first quarter performance. That's why we saw brokerages across the board upgrade the counter, and they've hiked the target prices. The highest target price was shared by Jefferies, 1210 rupees per share, which implies that another 12% potential upside could be on the anvil from today's high levels. So yes, brokerages across the board, that's what made them upgrade the counter for Paytm. Now, what made Jefferies positive was that the growth seen in monthly transacting users and gross merchandise value, both of these metrics saw good momentum on a sequential basis. They also believe that Paytm's current valuation is at a discount to PB Fintech, and they expect compounding-led returns for the counter. If you look at another brokerage firm, Citi also raised the target price on the counter to about 1215 rupees per share, and they said that the earnings beat was driven largely by the incremental cost efficiencies and higher than expected benefits from the non-DLG contribution profits. Also, we had Bernstein maintaining its outperform recommendation, calling the June quarter profit a milestone for the business, and said that the business will remain profitable in the coming quarters, but the sustainability of the current profit levels will be subject to sequential revenue growth. So yes, all in all of the brokerages remain quite optimistic on the counter. Yatin, if you look at the stock also, last year it was one of the strongest turnaround performers, and this year it is up about 7% or so, and brokerages now expect a good upside going ahead in the upcoming quarters.
Yes, and as you're mentioning, 1100, 1200 is the target range in which most brokerages have given a buy call. Obviously, the brokerage reviews are mixed. A few brokerages are still underweight on the counter. But yes, the management is now expecting a 15 to 20% EBITDA margins in the coming financial years. And due to that guidance, I think the stock, after initial knee-jerk, ended the day higher, by almost 2%.
That's right. Management guidance and everything quite positive on Paytm. But yes, one stock that did come under pressure after its disappointing first quarter performance was Colgate-Palmolive, because that stock saw a cut of about 4% or so in today's trade. Q1 earnings was missed across the parameters. Margins sharply contracted. Both top line and bottom line saw a decline on a year-by-year basis. And now the brokerages have also cut their target prices because they expect the near-term weakness to continue on the counter. We saw that Nomura has given out a reduced rating on the counter. Goldman Sachs and Citi have given a sell rating. HSBC and Nuvama, however, have given a hold and a buy rating. Now, what Nomura said was that the first quarter earnings were below the estimates, given that the volumes dropped between 3 to 4%, and the weak demand and a high base led to the volume decline. Also, that the company's margins were also under pressure due to higher promotions and a negative operating leverage. Goldman Sachs, they were also quite unimpressed with its June quarter performance, and they lowered the company's earnings estimates for FY26 and 27 itself. And Citi also mentioned that the weakness in the quarter was due to the tough operating conditions due to muted urban demand and higher competitive intensity. Now, Citi expects that the weak performance in the near term is expected to continue, and the second quarter also could reflect some of these challenges. However, we had some optimism coming in from HSBC and Nuvama because they expect certain recovery to take place from the second half of the fiscal year. But majority of the brokerages have given a consensus that there could be a hard time for the stock going ahead. But yes, Yatin, the stock is under pressure so far this year as well, and the stock has plunged about 13% too.
Yes, and I think the kind of weakness that we have seen in the FMCG businesses, Colgate is probably one of those which hasn't been able to catch up with the volume growth. Other FMCG companies have seen improvement and have been talking about improvement. I think Colgate's commentary was slightly weaker, and the numbers were also weak, because of which after yesterday's fall also the stock moved 4% lower in trade today as well.
That's right. Now, coming to one stock that also did well today on the back of its Q1 earnings, that was your Dixon Tech. The stock surged about 2% or so. We did see that the company report an all-round performance with its revenue, EBITDA, net profit, all of them growing more than 0.5%. So yes, Dixon Tech doing well on back of that. The strong performance was also led by a strong growth in the mobile phone segment, where we saw that the mobile volumes stood at about 9.7 million units in the June quarter, and the company expects that it is expected to grow to about 10 to 11 million units in the second quarter itself. And for the full fiscal year, they are targeting about 42 to 43 million smartphones. Now, how the brokerages have reacted, Motilal Oswal has given out a buy call on the counter, and they've raised the target price as well. They've given out a target price of about 2,200 rupees, which is the highest target price for the street at this point of time. Which means that it could see another 30% of upside going here from here on. Now, what Motilal Oswal liked was that the company is aiming to strengthen its relationships through joint ventures to drive the long-term volume growth, and also they believe that the incremental volume contributions was seen from the recent joint ventures of Longcheer and Vivo as well. Another brokerage firm where MK Global, they have also given out a buy call, and they remain positive on Dixon's backward integration efforts to expand its margins going ahead. So yes, Dixon Tech doing well, about 3% gains coming in, and so far, however, it's been an underperformer, but given the brokerages counter, that remains quite positive. Yatin, any assessment for Dixon Tech?
Yes, and you have Nomura, which has a target price very close to 20,000. So even at these valuations, brokerage do believe that there is value. In fact, the management guidance for increasing margins by nearly 1.5%, despite the fact that the PLI benefits will probably fade down. We have the backward integration benefits, especially with the Chinese joint venture and the new acquisitions that they have announced. Subject to clearance, I think a lot of backward integration progress would be made in the coming financial years. Probably that will aid the overall margins. But moving from PLIs and other stocks to Pharma, wherein CNBC Awaz exclusive and the sources indicate to us that Natco Pharma is most likely to acquire a South Africa based pharma company. Now, we gather that Adcock Holdings is one company that Natco has identified for its inorganic growth plans. Remember, we have the South African company Adcock, which is into OTC, which is the over-the-counter prescription drugs as well as in generics. They have 3 plants in South Africa and 2 plants under joint venture in India. They are specialized into these kind of activities, wherein they provide a good amount of cheaper drug options in the African subcontinent. We also have Natco, which is sitting on a good cash war chest, and probably acquisition of this size would mean some scale and benefits for them. Currently, Adcock has informed the Johannesburg Stock Exchanges that they are into a potential transaction, which if materializes will have a significant impact on the share price as a cautionary statement to its investors. Obviously, Natco did not comment on the story yet, but we gather that Natco is willing to buy a majority stake in Adcock Holdings. Currently, Adcock's market cap in rupee terms is nearly 4,500 to 5,000 crores, and a majority stake sale in the company would mean that Natco would be looking to pump in nearly 2,500 to 3,000 crores worth of cash with respect to this acquisition.
That's right. Natco Pharma, that is the news that we need to track as well. But for now, that's all the stocks we have for today. We did see Infosys reporting numbers. In some time, we'll have the presser as well. We did see Infosys reporting about 9% year-on-year increase in consolidated net profit, and revenue is also increased by about 8% on a Y-on-Y basis. So yes, Infosys, something that we need to watch out for tomorrow as well. And tomorrow, some more results will be coming out on the anvil. SBI Life, Bajaj Finance coming out with its numbers. So yes, all of these stocks will keep on the radar as of now. But for now, it's a wrap from Yatin and me. Thank you for watching.